Hello and welcome to the sixth video in the Portfolio123 series. In today's video, we are going to be talking about artificial intelligence. This is definitely one of the most advanced things that you can do with Portfolio123. And this is something that basically investment banks, private equity funds, a lot of them are using these very same tools and very same models to do their investment analysis, at least giving them screeners, giving them ideas on what factors have worked. And so now you have the power to use AI in your own processes, just like multi-billion-dollar hedge funds, private equity funds, mutual funds, all of them. So this really levels the playing field and is a very exciting development, I think, for retail investors. And this is something that I have just started to explore. So this video is going to be more of an introduction on kind of roughly how you do it, and I will continue to develop new content around this as I learn more and more about it. So this will just be a brief overview of the AI factor capabilities. So to get to that, we go up here to Research, click on AI Factors, and that's going to take us to this screen. So Portfolio123 has some pre-built factors, and so we can take a look at these as well. So let's just go ahead and do that. Let's start with the pre-built factors that they have made. So we're going to click on this factor, and then it's going to take us to this overview page. So when you create an AI model, basically what you're trying to do is tell it, this is what I am looking to do. So in this case, the target is a 3-month relative performance. So it's going to say, okay, I want you to find the factors that do the best job of predicting 3-month relative performance above and beyond a benchmark. So that's the goal of the model. And then we're going to have a universe, which is all the stocks that it's going to be trained on and essentially try to choose from. And then we have a data set, which looks at a 20-year period. And then you can also tell it how you want to normalize the data. So in this case, it's using z-score, which simply measures the number of standard deviations away from the mean. So in this case, if you have a 3 standard deviation, that would roughly be 99% of observations would be left in, but the top 1% would be kicked out, for example. So in this case, they've got it set to 2.5. So anything with a z-score of 2.5 or greater on either side is going to be removed. And that's just to try to eliminate outliers from having a large-sized impact on the model. So within data set, this is where you'll be able to edit different things, change different features, change the normalization, everything like that. I won't get into too many details here. We'll just kind of flip through. I do want to focus more on the features. So the features is where you're going to go in and tell the model exactly what inputs you want it to use and what inputs you want to look at when coming up with the model. So in this case, this one has 328 features or 328 different individual factors that it is using to try to predict 3-month relative performance. And this is where it gets insanely powerful. If you would try to do this all on your own, it would take you weeks, if not months, to run each one of these individual backtests. So what the AI is allowing you to do is to quickly and easily determine, of these 328 factors, which ones were most relevant for my goal of outperforming over a 3-month period. So this is truly incredible results. So you can add in the data sets, look in, let's just take a look at all of these all on one page to look at some examples. So for example, you've got here the percentage from 52-week high. You've got percentage from 52-week low, percentage from the 200-day moving average. You've got some analyst price targets. Anything that you can develop within Portfolio123, any custom factors you make, you can test them all with their AI factor model. Next, we have load, which is where you input your data set that you want to use. So we could pull in the S&P 500 or different things like that. Here's where you can see how much is being removed by your different filters. So you can see roughly, looks like 1% was removed because it didn't have any data. And then you've also got 2% that was removed because it didn't meet your other filters. You're getting about 1,800 of the 2,000 stocks per year or per date, which is good. So not much of the universe is being lost. Here's the training period, and then you also have different models. And so you can use different AI algorithms. They've got a whole bunch of them here that you can select from, and some of them get pretty in-depth. The more in-depth it takes, the more resources it requires. So for example, you can see that this ExtraTrees III model, that That took 4 hours and 42 minutes, or 4.9 gigabytes of data to run. So these can really get pretty insane. You can see some of these are up to 12 gigabytes, just huge amount of data being processed here, which is truly incredible that you can do all this right from Portfolio123. And then let's look at the results page. So this is where it tells you, of all those different models, which one produced the best results. And you can sort it by different metrics. I personally use the Spearman metric to tell how effective a model is. You can see other statistics like the high minus the low. So in this case, the highest scoring stocks outperform the lowest scoring by 45%. Truly incredible. The turnover, however, not a fan of super high turnover strategies myself, but that is 1,000%. So you're definitely going to want to implement some of these in taxable accounts. So it's Light GBM 3 is the model that it's using. So I'm going to go into this here, which is Lift. This tells you, okay, this is the model, what it predicted that the results would be versus the actual. So you can see how closely is this fitting to reality. And then you can look at the different models that you've built, and you can see the different accuracy levels of each one. And you can see as you get further and further away, like this one just was not accurate in the slightest. Another thing that Portfolio123 allows you to do is check to see how well these formulas, these models do at predicting the performance of stocks based on the quantile that they're ranked. So for example, let's just start with total return. This might be easier to understand. So the one, or the lowest scoring quantile. So we had 1,800 stocks roughly. This would be the lowest scoring 180 stocks. Those returned negative 21%. Meanwhile, the highest 10%, or highest roughly 180 stocks, returned 19%. So if you have a high-performing factor or a high-performing, in this case, AI model, you should see this upward slope. You want to see the model's predictions of poor returns actually be poor, and the model's prediction of stocks that return high to be high. You can also take a look at the excess versus the universe. So this just tells you how much did these stocks outperform. In both cases, you want to see an upward sloping chart, and you want to see ideally each be a little bit better as you go to the right. So less negative, and then finally positive, a little more positive, a little more positive, a little more positive. This gets a little not ideal, but none of these are going to be ideal. But you can see that, in theory, this should, Portfolio 8 should be higher than Portfolio 7, and Portfolio 9 should be higher than Portfolio 8, and so on. That's not quite the case, but the most important thing is that the best performing stocks outperform the lowest performing stocks, and then you see a generally upward slope for the other observations. And then you can also take a look at prediction, which tells you which stocks, based on this model, does the AI think are going to outperform. You can't do that here. So to do that, we'll have to create our own AI model, which we will do in the next video. So as I play around with this AI tool a little more, I will put together some AI models of my own, and we'll take a look at some of the predicted results of those. Thanks to Portfolio123 for bringing AI-powered insights to the retail investor. This is a truly amazing capability, and I'm very excited to use it more myself. If you're interested in signing up for Portfolio123, I'll put a link in the description down below, and I will see you in the next video.